Entries. Entries are very, very important, and for various reasons, they actually determine how we see the market. From the last bootcamp, we had two entries in particular, like two entries that were mentioned. And then, so the first one was the EFG setup, the engulfing field setup. And for that, we have the three candle type, and then that three candle type and the extended type. Okay. So we saw examples on the EFG setup. So let me show you examples, trying to see. I don't know if it's possible to be able to finish this class today, but I'll try to see if that's possible. So we spoke about the EFG. So let's see examples of the EFG setup. Okay. So a very good example is what we have right here. This is the EFG setup, the three candle type, right? So price came back up and then the buy started. Okay. Also you have it right here, three candles type. Okay, the price came back and then started to buy. Right. You would always see it on the chart. Okay. Again, you have another one here. This three candle, this three. Right? Broke out, taps, and then the buy continued. So those were, and we mentioned that the EH setup is usually for continuation, almost always for continuation. Okay. So engulfing field, but price didn't come back to the extreme, right? This is the engulfing, became an engulfing field. And price came back. Okay, nice. Breakout, tap that level, and then start to sell. Okay, so EFG setup, very, very potent setup. Okay, let's see if we can get another example. Okay, this is another example here. These two engulfing by when this guy formed became an engulfing field. So this is a three kind of type. What happens? Price came back, taps your stop above this level, and then you keep riding the sell. Okay, where else can we see EFG setup? Okay, I think that's for last week's price action. So let's go back a bit more. All right, you can see it right here. This is an engulfing field. Okay, an engulfing field. And before the engulfing field, you had this engulfing, right? So our EFG setup. So this is the single candle type again. Price came, tapped, and then continued high. So we spoke about this setup a lot of times in the bootcamp. Again, right here, this is our engulfing, our bullish engulfing, right? These two candles, and then this guy forms. So the engulfing field. So what happens? Price came back to that level, taps, and sell continued. Okay. And yeah, I explained this one already. So let's see my examples. Sorry. Oh, no problem. No problem. Let's see my examples. Engulfing field, EFG setup, EFG, EFG, EFG. All right. There's another example right here. This one, the price came back to it, and then the price continued. So the EFG setup is very, very important. So again, after the EFG setup, we spoke about the MSU, right? The first entry by EFG. Sorry, I don't understand the question. Maybe when I'm done, maybe I'll take the question, but I'm not sure I understand the question now. Okay, thanks, bro. So for the MSU, I was just trying to recap the entries we had from the previous camp, the EFG setup, which was a continuation setup. So we mentioned that the EFG can either be a three candle type or an extended type. And so I was trying to show the candles. So the second entry we mentioned during the bootcamp. Yeah, exactly, a recap. So the second entry we mentioned during the bootcamp was the MSU entry. And for the MSU entry, we like I explained when we're talking about inducement and liquidity, we already explained out that the MSU entry is a simple entry and it's for continuation setup. So for example, in a bullish market, you expect new highs to form you expect the lows to get induced. So when price breaks, you expect that price will come back in between this level, somewhere in between this level, taps and continue. This is continuation setup. And where will price continue from? Price will continue from two places. Either price continue from an engulfing field or from an engulfing. So either from the engulfing field that formed around here, if there's an EFG, price will continue from that level. Or if there's an engulfing at the extreme or an EFG at the extreme, price will continue from that level. So that's MSU. So in a sell scenario, you have new lows from the ice get induced, and then when price retrace, it will continue from here and keep selling. So that's the MSU setup. So MSU is a strong MSU into a strong level or order flow area. So this is the most recent entry I just explained. And I explained out that this is how price would show us its intent. Price is going to use this to show you what it wants to do really. To show you an MSU into your level or before your level, telling you, giving you the idea that it wants to do something crazy. So I gave examples the last time. So again, let's see if we can get some more examples. So for example, we have this level. Let's see, we have this level. Let's assume we want to buy on this level. And what does price do? Price comes. Sorry, let me take this away. Take this out. Show in 15. What does price do? Price gives an image. See, takes the low, takes the high. In fact, comes to the extreme. And we have our sell setup just right here. This is our MSU into that area. Broke, came into the area. In cases like this, when you get an MSU into an area, you can buy directly. Why can you buy directly? Because price already induced what it wants to be induced. Okay, price is not going to come and induce us again. And because the reason why I had to teach inducement and liquidity was because sometimes you can have an engulfing. Say you have an engulfing like this engulfing, something like this, and then you're probably playing the and then it has weeks, right? This week, and then this other two. And then you open the price to probably come to the extreme somewhere here, right? So probably price to come here, tap and go. But this would not happen, right? It does not always happen. So you can see price will come all the way, take out these two lows before it start going higher. So that's why we have to talk about inducement. We have to be able to understand, okay, if price is doing this to me, why is price doing it? What's the logic behind it? So we don't fall for traps, right? So we have this MSU into our zone and then good entry. So when you have MSU into an area, it's a sign that you can enter directly. Let's see other examples. MSU into a zone, enter directly, always enter directly, okay? Again, right here, what do we have here? What do you guys see? First of all, I can see this funny candle. I don't know why I call this funny candle. Now, into our funny candle, we got an MSU, right? So price at this point, nothing here. So here, so price takes the high right here and then takes the low. Okay, came into the level. I can buy directly from here. Why? Because I have an MSU into that area. Okay, in fact, the continuation MSU into that area. So when you get an MSU into a zone, always be willing to trade that zone. Okay, another example is this buy that happened. Now for this buy that happened, price is reacting from somewhere around here. Sorry, not wrongly drawn. Oh, okay. So the price is reacting to somewhere, came to induce this low. So from somewhere around this level, okay. But price didn't take this low out. So what did we get? We get price takes the high right here, comes take the low. So at this point, if I want to enter this trade, I'm permitted to actually enter directly after this inducement. Why? Because you already gave me an MSU, got an MSU into that level, okay? The same thing for this level. So it could be for continuations, it could be for reversal. It's just a sign that prices give you an intent. Price is showing you its hand. And that's why I said price will not do anything without showing you what it wants to do. Price takes the low, takes the high, came back to the extreme, induced, tap the extreme level, proper mitigation, and then price starts to come down. Okay. Why is that important? Because if you had entered on this particular engulfing, probably this first sell, you'd have been well interested and probably your stop was above this level. And then the sale was already going in your direction pretty well. It's good. You're probably already in profit. And what do you see? Suddenly, price taps this level, takes you out, and then the proper sale starts. Okay. So again, SL placement very, very important. Again, MSU into this level, price takes the low, price takes the high, tap into an EFG setup. This is an EFG setup, right? Taps and then properly mitigated, right? If your stop is above this level, more than 50% tapped, and then the sales continued. Okay, so you can have an MSU setup into a level. Okay, MSU into a particular level. In fact, it's one of the best, and that's why when you have a level, it's something you can anticipate to happen. When you have a strong level, and then you're looking that price will come to that level. So let's consider this as an example. Probably you mark this level already, and then price gave you something like this. You see at this level, this was the low, got taken out. So the price takes the high, takes the low, and after taking this low, returned all the way back to induce this guy, came into your level. You have more reasons to buy, okay? And then on the continuation, you just keep riding it, okay? So MSU setup into your area is usually a valid reason to actually buy. Again, the same thing happened here in this scenario. Price takes the high, takes the low, then continue the high, okay? This is the high, it came, induced the low, right? Last low, structural liquidity, right? Last low before the main low, taps. Price came to somewhere around there, 50%, broke, and then continued. And before you continue, did you just continue all of a sudden? No, give us MSU price, takes the low right here, takes the high, comes back, takes the low again. So this is take the high, take the low, price continue. Okay. So the MSU into the level, very, very important. MSU into the level, very, very important. So like I wrote that you can have an MSU into a strong area. So you enter straight and put your SL above or below the strong level. Okay. You can decide to wait for an M5 engulfing or M5 engulfing field, which we'll talk about when we talk about the playbook. So the MSU into your zone is price showing you its intent, and it's something you should always follow. In fact, always anticipate that price would behave that way. And before any entry on M from M30 to M5, whenever you want to take any entry and you're on M30 and M5 time frame, always go back to check H1, H4 in order to corroborate your setup. So for example, you want to take this is M15 charts. Probably I want to take a trade on M15. And let me look for a very good example. Say I wanted to take this buy. Now, my reason for this buy on the M15 is this EFG setup, right? But I have to find something that corroborates this EFG setup on the higher time frame. Obviously, on the M15, I know this is an MSU, right? Price retraces, give an EFG, so price probably come back. But on the H4, H1, what corroborates this buy? So I have to always go back to check. Why? Because the higher time frame is what controls the entirety of the market. Okay, so I can't remember where I was. Sorry, let me just mark it. Where was it? So, okay, this was it. So let's have this right here, H4. Okay, so on the H4, so this was the level I wanted to buy from, and on the H4, obviously, this is a gap level. Gap level. So that corroborates my entry, right? So if I want to buy here, will I be too scared to buy? No, I won't be, right? Because I have an H4 level back in my setup, right? Back in my entry. I have an H4 setup back in my entry, right? Okay. So the other types of entry is what is called the flipped engulfing. Now, this is very, very important, and I would like you guys to pay some attention. Now, for the flipped engulfing, a flip engulfing is an engulfing that forms after price has reacted to another engulfing. Okay, I'll show you an example. Now, in this scenario, um, let me just go to the chart so I don't have to let me take everything off. Let's see flip. Let's see what a flip engulfing is. So, and I need to find a very good example. Let's see. Let's see if we have one here. Okay. Now, for a flip engulfing, we believe that the engulfing that price forms after it has reacted to another engulfing. So, for example, when you have something like this is an engulfing, right? This, this, okay. Now, after this guy tapped, he formed this engulfing, this new engulfing, this one. So, in this scenario, this is our flipped engulfing. Now, this is a bad example. Let me look for a proper one. Sorry. Let me look for a proper one. Okay, let's see. Is there anyone here? Yes, I need to look for a proper one. That was a very good example. Okay, this is a good example because the flip engulfing is usually something you see when price wants to reject or reverse, sorry. So you have this engulfing, this one, this huge as engulfing. Okay. So what does this engulf? What did he do? When price tapped this engulfing, he formed this new engulfing, this guy. This new engulfing that formed after price tapped this level is our flipped engulfing. Why is it called flipped engulfing? It's called flipped because this engulfing that it tapped was supposed to push price higher, but it did not push price higher. Rather, it formed this engulfing and then price broke it, right? Broke. Now, it means that when price retraces, the most likely place price will continue the trade from is from the flipped engulfing. See that? The price taps and then the sell. So, like I mentioned, it's usually from you usually see flipped engulfing when price wants to reverse. Okay, so you have an engulfing price reacted to first, and then price breaks that engulfing. So the flipped engulfing that got formed is where price will come back to continue the trade. All right, let's see another example. Let's see. Trying to look for the best examples. Like I mentioned, usually from reversal, so I have to go to reversal level to look for it. All right, well, I think there's something here, right here. So let's take this as our engulfing, not the best example really. Let's take this as our engulfing, right? So when price came back to this level, rather than price rejecting this level, right? What we had, what we formed is this guy here. This is an engulfing. Like I mentioned, this funny candle is an engulfing. So price taps. If you go to the M1, we'll probably see it better. So when price book our engulfing field, it's going to use this flipped engulfing, this flipped area to continue the market on higher. Not the best example because the engulfing is not very explicit. So let me look for another one. Okay. Usually when you're expecting reversals, right? It's usually good for continuation. Price would more often tap tap that level for continuation. Now, another example here. So you're expecting price to continue from this engulfing, right? This is an engulfing. So price comes, taps this engulfing, then you're expecting price to continue from it. So when price tapped, which engulfing? The price tapped at this level and formed this engulfing, these guys, all of these guys, right? And then we broke the engulfing. So when we return into that level, price is more often than not going to use that flipped engulfing to continue price to the downside. All right, I'm going to use another example. I need to explain this properly because it's very, very important to you. It's something you come across almost always. Okay, so okay, there should be a good example here. All right, so see this. So we have this level. So price was coming all the way. You have this level, right? This guy, price taps this level and then rejects, reacts, right? Price reacts. and eventually we broke that level. Okay, so the engulfing we find from year to year would be our flipped engulfing. And that's why when price comes back, see something like price comes from this level, price takes the high, comes, then takes the low, then continues from this engulfing that formed right here. Okay, so we'll be looking for our entry from between this level and this level because that's where our flipped engulfing is. Now, if you ask me, for me personally, what I would have done in this scenario, because this level is so wide, is to go to an M15 engulfing level. So if I go to an M15 engulfing level at this point, I'm able to see where I want to take the entry from. So I could easily take the entry from this engulfing field, right? Because this is my flipped engulfing, right? This is my flipped engulfing. So tapped, formed an engulfing, broke, price comes back to that level, and then the buys continue. Okay. So I think that's a very, very good example. Right. See, stops, yes, see, taps, and then the buys probably continue higher. Okay. So that's the idea of flipped engulfing. Okay. So price taps, the engulfing fails, price breaks the engulfing, and then price reacts. Let me give one last example. Okay, one last example. Okay, now this example, this looks very clear though, but so price all the way we have this engulfing. In fact, an engulfing field. So price taps that level and formed a new engulfing. This engulfing, right? Formed a new engulfing and broke. So more likely than not, when price comes back to this level, price is going to use that engulfing to continue price. This is our flipped engulfing. Okay, we're going to use that engulfing to continue price to the lower side. Okay, another example. I want to be very clear about this so there won't be any confusion. Okay, so let's see this other example. Okay, so we have this engulfing field, right? So when price tap the engulfing field, this engulfing formed, right? These guys formed. So more often than not, when price comes back to that level, see, price is going to use that level. In this scenario, price induced the high, took the high out, and then we sold for a while. Okay, so it always happens. It always happens. Okay, so you must just know what your flipped engulfing is. So overall, it's usually something like this. You're going higher, going higher. So price comes, taps the level. You have an engulfing here. So that reacts a little bit. The price breaks that engulfing. Price is going to come back to this level and continue. Okay, so this is your initial engulfing. The engulfing that is formed here is your flipped engulfing. Okay, so that's that on that. So the next entry type, oh, I have to be fast now. The next entry type are the QM entries. The QM entries are very, very popular, and there are many variations of the QM entries, right? But because of time, I've not covered exit, so I would try to cover this, use the remaining time to cover the remaining entries. We'll talk about exit later. Okay, so for the QM entries, we have things like this. So for example, in this scenario, what we have here is let's see, so price left shoulder, we have the apex. Now between the left shoulder and the apex, you have price just forms an engulfing within this area and then breaks. More often than not, price would continue from this rejected zone. And that's why it will look as though prices continue from the left shoulder. There is an engulfing that formed within this leg. The same thing here. So we have the left shoulder, we have the apex. So just in line with the left shoulder, you have an engulfing form right here, right? And what happens? Price will continue from that engulfing. Now, what does this remind you of? This should remind you of the flipped engulfing. And that's why I taught the flipped engulfing earlier. Why is it reminding you of the flipped engulfing? Remember, so price broke, sorry, price broke this level. Price is coming all the way back here. There's an engulfing right here that rejects price. So price will just react a little bit and then break. So where will price continue from? From the flipped engulfing. Okay? Going all the way high, right? You have an engulfing here. This guy taps, taps and then reacts. And eventually we broke. Okay. So what will happen? Price will most often than not continue from the flipped engulfing. Okay. So that's just the example we finished talking about. Now, the second one is more like a QM that is an MSU. Okay. Because in this scenario, what is forming the engulfing, the fluid engulfing is an engulfing field, but it's still an MSU. That's why all these things, they are intertwined, they are together. So in this scenario, you have price take the low, price takes the high, right? Breakouts. They are all together. The stories are all together. Takes the low, takes the high breakouts, and then prices coming back. There might be some buildup of liquidity. Price will just be accumulating, making people think it's not doing anything. Then suddenly price comes, taps your level, right? And then you see the sell. Why is this level important? We have an engulfing field right here. The price came to, react, dropped. So again, this is your flipped engulfing. Flipped engulfings are very important. You can see them almost anywhere. You just have to pay attention to the story. In this scenario, what do you have? You have price takes the low, takes the high, sorry, takes the low. So you have an engulfing field somewhere here, right? The price taps, reacted to, broke, right? So when price returns, more often than not, price is going to use the flipped engulfing. So let's see examples, right? So I think that's the next thing to see. Though there are other ones which probably show you later. Right, so let's see. There was one very example. So I like us to just check this previous week price action to see if we can get an entry. Okay, so oh, these guys are still here. Goodness. Delete all drawings, please. Thank you. Then you go away. Then I have the chart. So here, it's clear of this explanation. Oh, thank you. Thank you. Okay, so let's see our entries from last week. So price opened. Just want to play around a bit to see if we get the whole idea. Okay. So price opened. In this scenario, what do we have? If I go to M30, I'll probably be able to explain what I have here, probably. So you see right here, we have our QM. This is the QM, right? Yeah, something like this. Take the low, take the high, press forms, then drops. Then just right about our QM level, you see this flip zone, right? This guy reacted, tapped this engulfing, then reacted, right? Broke. More often than not, where will price use? Price came back to that flipped engulfing and then continued higher. Okay, so it happens. Let's see, do we get another one? The closest again, see the line charts for the QM. Okay, this level, we're at this level. There was no entry here, really. There was entry, but with okay. If I'm going to enter this trade now, I'm probably going to enter off of this rejection because this guy completely mitigated this candle, this funny candle, right? And also, this is an engulfing field setup, even though price didn't tap completely. So, like, they expected that price to tap that level and all of that. So, the breakout level got tapped regardless. All right, so let's continue what we're saying. I'm just trying to show you the QM entry. Okay, so another one right here, right? Oh, which we're probably still going to talk about. Now, there is, like I said, the QM entry comes in various type. Now, there's another type of QM entry where you have double support before the head and shoulders. So price starts, continues. Okay. So in this scenario, double support for buyers. For sellers, you probably have double resistance, which is what I see here, which is when I'm talking about this QM type. Okay, and then sells. Okay, so there are QM type like this QM, a lot of entries from QM. So what you have here is double resistance. Okay, so price comes, stops, and then you get the sell. We're still going to talk about confirmation and all of those things, but just trying to show what we have currently. All right. Again, what else do we have here? Now from this engulfing, price was supposed to buy, right? Now this one is a weird one. What do we have instead of 10 minutes more? What do we have instead pricing? Use the I came just within this area, this QM zone, and then sold off. Okay. Another one, let's see more examples. Any other QM here? Say any other QM? No other QM, not much. Not like here. Okay, so let's see other places. All right, all right, all right, all right, all right, all right, all right. Okay, another example. Okay, so we are low, and right there you can see this level, right? This notch right here. So this guy tapped this level and then reacted. Okay, and what happens next? Price continues from this flip zone, broke. So a very good place to even anticipate buying pressure would be this level right here, because price has not really used it after it broke. So this would be a good place to anticipate buys. Okay. At least you get some tap when price gets to that level. Okay. Another example, see we have a queen here. Yes, we do. Now see, this is even very sweet. So this is the eye, left shoulder, the eye. So price this level tapped and then rejected, right? And eventually we broke. So where did price come to? That exact same level. Okay, the exact same level taps and then price continues. Okay, so more examples, maybe one more, and then probably call it a day. Still have other entry types I would love to talk about, but time is not on our side. Okay, let's see. Which other one? Alright, guys, I'm trying to get another entry. Okay, you see this one. It's just right here. Let's see. You got Q level, but we price didn't tap it. But what you notice here is price come to the QM. Now, when we form the lowermost shoulder, what happens? Price taps this level right here. This candle tap the level and then rejected, got rejected, right? So when we break out of that level, more often than not, price will use this to continue. So price taps for continuation and then start pushing higher. And that's why the QM is the explanation I've given is an explanation you can apply even when you don't see exactly what I just explained. Even when you don't see exactly that, you can form that narrative and be able to, oh, okay, this is what happened. For example, there's in this scenario now, this is not an engulfing, but you see price reacted from that level. This level, price reacted from it solidly. And like I said, more often than not, price will continue from that reaction because this guy broke it. Okay. The price taps and then we still got some decent sell. So it's something you can explain. Okay. It's something when you see can give an explanation. So, why is price doing what price is doing? What's the reason for this move? What's the reason for that move? And that explanation is going to bet a lot of clarity. Now, the same thing happened just here. So we have this QM just right here, and then we have this reaction. So price tapped this level, then came all the way down and formed this funny candle right there. So when price comes back to this level here and buys, you won't be surprised. It's an entry level that price left unmitigated. Okay, even though we tapped right here after we broke, we came back, tapped a little bit, continued to buy. Price still came back at this point and still tried to buy and still bought a little. Okay, guys. I think that will be all. Can't cover all the entries right now. So I don't know if I should fix another class for evening by 6 p.m. If you'll be available, just let me know. I'll fix the class. So complete the entries and then we'll talk about the exits. Do have a wonderful evening. Or let's see. I think I have something in chat. Okay. I'll complete in the evening then. All right. Thank you.